Hello, everyone. Let's get started. My name is Carrie Slade. I'm the Assistant Academic Director for the Innovation Entrepreneurship Institute here at Temple University, what we call the IEI. I'm also an Assistant Professor here in our Innovation Management and Entrepreneurship graduate program. We're so excited you could join us today for our talk with Brian Hinman, the Chief Commercial Officer of Aon. This is part of our Innovation Leader Speaker Series. And the goal of the series is really to bring together community leaders in innovation, people that want to be involved in innovation, as well as students, Temple students and alumni, to talk about innovation best practices and to share ideas and stories about innovation so we can all become more innovative. So really appreciate you joining us. The series is a collaboration between Temple's IEI, the Center for Student Professional Development, the Fox Alumni Office, and the Innovation Research Interchange. So I want to give a special welcome to any IRI members who are here with us today. So let me give you a little introduction on Brian. As I mentioned, he's the Chief Commercial Officer for Aon, and he's also head of Europe, Middle East, and Africa. In this capacity, he's part of the executive leadership team, which delivers IP solutions that enhance Aon's enterprise value through executing IP-based value creation strategies and mitigating IP risk exposure. Brian helps lead the efforts for Aon in seizing the generational opportunity to establish market-accepted standards for assessing and valuing the IP asset class for businesses and investors. Brian Hinman has over 30 years of experience in the field of intellectual property, having held senior executive positions at some of the world's leading companies. Most recently, he served as Chief Intellectual Property Officer at Philips, based in the Netherlands. In this capacity, he also held the position of CEO of Philips Intellectual Property and Standards, where he led a worldwide team of over 400 intellectual property professionals in 9 different countries. He formulated and executed a robust IP strategy for each of Philips' business units, including IP portfolio management, all IP litigation matters, offensive and defensive, active participation in various industry standards, and conducting all forms of IP monetization, including patent, technology, and brand licensing and formation of various IP ventures. Prior to Philips, he was co-founder and chief operating officer of Unified Patents, Inc., and prior to that, he held positions of vice president of IP and licensing at IBM, Verizon, and InterDigital, and was founding CEO of Allied Security Trust. I've been able to spend a little bit of time with Brian in his visit to Temple, and I can say he is a thought leader and truly an expert in IP strategy, and I'm really excited you all could join us and get some of that knowledge. Without further ado, I will let Brian take my seat, and we will commence the webinar. Thank you.
Thank you so much for allowing me to take some time to speak with you today. I think I'd like to make this hopefully an interactive session. I know there's a number of you that are remote, so it's might be a little bit challenging. But I think a lot of what I'm going to talk about today is very thought-provoking and really talks a lot about change. And I want to talk about trends because trends are really important, and the world has been shifting very, very quickly and very, very aggressively in a lot of different directions, not just in the world of patents, but I'm going to talk holistically about intellectual property. So pretty much IP agnostic. So talking about copyrights, patents, trademarks, trade secrets, and of course patents I think are prevalent as well. But suffice it to say, a company and any entity in the world today is dealing with the challenges associated with the world of intellectual property. So the first thing I want to talk about here in the U.S. With respect to trends, I think the trend here has been an explosive growth, and I can't underscore that word more succinctly as far as the explosive nature of the growth of the patent world. So starting back in the year 1790 with the Patent Act, when you had the very first thought of capturing innovation in a way that combines copyright law and patent law, and allowing people to seize that opportunity to take those innovations and substantiate those and protect those. And that's really the point I want to underscore most importantly with respect to innovation, that innovation is a wonderful way for individuals to capture ideas. But unless they're captured and protected, then they're just an idea. And ideas can be taken, they can be stolen, they can be misappropriated, they can be, and you know, in the case of patents, if you're not that person with that first idea to go out there and file that idea, then others can easily take those ideas and take them and count them as their own. So here in the world of patents, we're up to the 10 millionth patent, which was signed last year. USPTO Director Yanku and I have an ongoing dialogue to really understand the changing nature of the patent system and patent reform and different changes they're making. But he did sign that document last year with President Trump. It was a monumental day in the patent world. This chart here talks about two different disruptors. I think that's important. The first one being that we are in a global innovation-driven economy. So we passed the Industrial Revolution. Now everyone is embracing global change with respect to innovation. So every time a patent is issued, it sort of really substantiates that change. So half of the U.S. patents have issued in the last 27 years, and most of them, we've got the last 1 million patents issued in the last 3 years. So every business is going through this disruption and has to understand the best way to substantiate that innovation. I'm not advocating that patents are the primary way that a company can do that, because there are alternatives. You have the idea of trade secret capturing, so that way you have an idea that's know-how that can be embraced and captured and secured in a trade secret. Obviously, there's some challenges there, because in the world of the way we live in now, you've had some changes in even that system with the Defend Trade Secrets Act that was initiated a couple of years ago. The gentleman that wrote that piece of legislation for the government now resides on my team, a guy named Jim Cooley, and I think it's, you have to have a different way of a different mindset of capturing those innovations, protecting them, but make sure you have the right safeguards in order to substantiate that innovation. So businesses have to act quickly, because as I say, the world is morphing, and you have lots of bad actors out there that can seize opportunities, and I'll talk about that as well. The second disruptor is the unprecedented value rotation to the world embracing the value of intangibles. So here we are in 2019, in which 85% of the value of the S&P 500 is embracing the world of intangibles. Intangibles also includes contracts, customer lists, things like that are intangible in nature, but they're moving away from the value of purely relying on property, plant, and equipment. Back in 1975, that's what they embraced. And today, it's really morphed to a different value equation. So now companies are looking at, that's over a $21 trillion opportunity just in the S&P 500. So you can imagine what that would look like if you factor in everybody. So there's all types of things happening. It's very difficult to value. So the job that I'm in now, I'll go into that a little bit. So I spent 4 years prior to this in the Netherlands at Philips. I came back and embraced a role here at Aon. Aon is a traditional insurance broker, and they provide lots of different types of non-traditional insurance that you might not be familiar with, like an M&A situation, having a transaction liability coverage to cover any types of errors and omissions or contract deviations or things that a buyer in the M&A situation might not be aware of. We want to have insurance to cover that. So Aon's got lots and lots of relationships with private equity and hedge funds and folks involved in this M&A process, and that's a large part of our business. We did adopt an intellectual property strategy and really did a small acquisition of a firm out of Spokane, Washington, that was focused on strategy and valuation assessment. And I joined about a week after that, so I'm helping to lead this organization, and we're really morphed into three verticals. One, embracing strategy, really helping companies do a foundational assessment of where they are now versus where they want to be from a business strategy, longer-term perspective, but also trying to take that longer-term business strategy and taking a snapshot of where they are today with their intellectual property stack. And I say stack because it could be patents, it could be trade secrets or copyright know-how, whatever it is. And we look at that and look at that snapshot and whether or not there's a fit for purpose going forward, such that they're able to recognize the revenue from these longer-term business ambitions without fear of a risk of having third-party encroachment of patent claims from third parties that might read on potential revenue streams that they're trying to generate. So we look at the risk calculations, we look at the opportunities that your IP stack creates from an opportunistic valuation perspective, being able to achieve more revenue from strengthening that portfolio, or being able to address a gap in that portfolio that you might not see. So we do that, and then we're able to value it. We've got an AI-based platform to be able to do that, and then also addressing the risk element. So on this chart, you're seeing strategy and value, which is very important because it's everywhere from a company trying to figure out, as a startup, how do I get more money through a borrowing capacity, and if you've got intellectual property that's valuable, you can actually borrow based on that. We have a collateral product, basically, that will do that. So you can do that. You can obtain insurance around it. You can address areas like theft of IP, which is a huge problem in the U.S. So this whole disruptor is becoming a major change in which markets are actually rewarding protected innovation. This is just a brief quote from a gentleman I actually got to know when I did a deal when I was at IBM. Bill Gates was the CEO at the time, and he was a pure visionary. Right? Even in 2004, when the world was a different place, and the importance of IP was just starting to burgeon as an important asset class, he recognized through this quote that these assets do drive growth and innovation and relationship with companies. You're seeing lots of innovation that's substantiated through products, and this is one. A cell phone is an interesting product that embodies everything what I'm talking about as far as the different types of IP and different things like know-how and trade secrets embodied as well. I have a question on the bottom as far as how many patents are in the cell phone, and you can imagine with all the apps, the functionality, and the different characteristics with the wireless functionality and everything else associated with the cell phone, it's a very, very crowded space. And I bring this up because you've heard of the cell phone wars between Samsung and Apple, but you're also seeing between companies like HTC, Verizon, some of the operators and some of the carriers are also involved in these fights because there's a total of 250,000 patents that are associated with that one device. So you can imagine with this type of what we call a patent thicket, where you're seeing lots of clogged patents associated with every feature imaginable, somebody going out with a cell phone device is subject to a lot of these different patents that they will have to address. So being able to address those challenges from a risk and an opportunity perspective is very important. These are the types of IP I just mentioned. This is an idea of a product that I sold at Philips, for instance, that is an Arelco razor that embodies all of the different elements between the shape of the design that you can enforce, technical features in the patents, the know-how that can be substantiated in trade secrets, whether it's the manufacturing process or the way that you conduct the design work, can all be protected through this mechanism. Algorithms through the copyright, through the smart device, connectivity with the user. You've got the brand, the trademark itself, and then the online presence through domain names. So one of the trends, obviously, is that IP is encouraging innovation, so it's encouraging human progress. So you see the patent system has been explosive growth, as I mentioned, but along with that is an opportunity for companies to capitalize that through monetization. So you're seeing a lot of patent violation cases filed, and I'll explore that a little bit more later. But intellectual property is difficult because it does really triangulate three different pieces of business, technology, and law, three different disciplines that it serves as the core in the middle, and it allows you to ask really meaningful questions that are very, very difficult to answer, which is, what do my patents cover? How can I really know that I have sufficient IP that covers this business? How do I know that? How do I know, what's a trade secret? How do I protect those? And all these different types of questions are very difficult. This patent here is an example of one that was at IBM. So when I was at IBM, it became difficult to answer the question, does quantity matter or does quality matter? And so with a company like IBM that has about the same portfolio as Philips, around 80,000 patents, but you have to, you're challenged by coming up with patents. In this instance, it was a patent for a bathroom reservation system on an airplane, of which you're on an airplane and you're trying to, there's a long queue and a long line of people waiting for the bathroom. And this patent that was generated out of IBM research in Yorktown addressed that. So basically, you receive a request, you process a request, you have to use it, the passenger's assigned a number, and then you cancel the reservation, or you go on until you're notified it's your turn, you go up and you use it, and then the next person in the queue is informed that it's his turn. So it's a rather unique invention, but it cuts to the core of the idea, what does this relate to in the IBM business, right, as far as what IBM does. And I was questioned this when I was at IBM by a reporter, and I think it's, so quantity and quality are two far different things. We wound up abandoning this patent because it did not relate to the core business, and we didn't want to catch continued heat from investors that were questioning about the cost that it costs to generate a patent like this. And so you really, as a company, have to think through, what does it relate to as your business progresses? Make sure that what you're doing is relevant to what you're trying to achieve. And as you're trying to think through options, the other trend is that companies have options and they're seizing different opportunities to exploit intellectual property. And whether or not your objective is cost savings or profits, you have four different quadrants that you'll find yourself in. The upper right is associated with product exclusivity. So when I'm at Philips and I want to have an ultrasound business of which I don't want my competitors like Siemens and GE copying those inventions and being able to have the same features that I have, then you want to secure patent protection and seek an exclusivity in the marketplace, and you're able to have premium profits on your products that others can't have because you have this exclusivity. And so we had a lot of the strategy that I was implementing for some of my business units at Philips were focused on that. Oftentimes you have a defensive model on the lower right where you want to have a freedom to operate instead, and you want to have exclusion prevention or litigation settlements. You want to have injunction avoidance, and that's more of a defensive model. On the upper left, I was running between a $600 and $700 million annual business in monetizing intellectual property through licensing. And so you had a commercial model that had contributed right to the bottom line. So I was running this business that was about an 80 to 90% profit business. So it was very high margins through licensing revenues. And we did a lot of this work to extract revenue on companies that had products that read on the patents that we had. And on the lower left, you can have a mitigating model. We also did this for some business units where we did a massive cross-license. And you would do this in an instance where you have sort of a Mexican standoff. You have a large competitor like a Siemens that has a portfolio that's every bit as large as yours, and you want to have a agree to disagree, and you want to sign an agreement that says, I will agree not to sue you, you will agree not to sue me, I license you under all my patents, you license me under all your patents, and nobody changes any money, no money is exchanged, so that's that mitigating model. So this is sort of the trend, is that you find yourself having to find yourself and execute one of these four strategies. The investors are caring a lot more about IP strategy. I deal a lot with hedge funds and private equity, and they're recognizing, or at least they have to start recognizing, that IP has no limit on its value. It can be leveraged in a lot of different ways, whether it's collateral for borrowing, freedom of action, licensing, premium pricing. It lessens your operational risk because you can scale your business quickly, extensively, and geographically. And companies protecting IP are better business partners, whether it's a distributor, a reseller, a partner that you want to do, a supplier, then you're less at risk. And it also boosts your marketing and your sales activities as well. So if you look at a pure investment opportunity, in talking with private equity, I often get the answer that when they invest in one of these portfolio companies that they have, there's some naivety as far as what is the value of the IP. I ask them, what is the value that you attribute to a company that might have a startup that has a handful of patents? How do you attribute value to that acquisition? And invariably, sometimes the answer is as crude as saying it's a box that I check on my checklist on their due diligence, which is nice, but it's irrelevant, because if you've got patents related to semiconductors in this chart and they're selling toilet seats, then it really does not matter, right? So you have to align your patent filings with the business that you're actually conducting. And so without that alignment, then you have assets that are doing you no good and has no value with respect to the revenue that you're achieving. So the light bulb goes off with these people when they're starting to recognize what that value means. Another example is when I was at IBM, when I was faced with a discussion, difficult discussion, I had many of them, by the way, with my CEO, former CEO Lou Gerstner at the time, was a brilliant mind, and led the company through a difficult transition back in the early 90s, where we shed about 2/3 of the workforce. He came in and he was concerned about value and wanted to know, we've got 80,000 patents, tell me why I'm spending this money. What is the value that I'm getting for all of these patents? And I could have ascribed the value to the $1.6 billion annual money that I was receiving from licensing, or I could go at it from a different angle, which I did. So I took the cover off of one of our laptops at the time before we sold the business to Lenovo, and I looked at the innards of this ThinkPad, and I put a sticky flag for all these different pieces, everywhere from the hard drive to that little red dot that you see in the middle, as well as other functionality of that laptop. I showed it to him, and he immediately got that value, because without those 200, each one of those sticky flags represented a IBM patent that was issued on a function of that laptop. Without those, we would wind up with a lot of risk from third-party infringement of third-party patents and many lawsuits and a lot of money that we would have to, which would eat into the revenue associated with that business. So that was the component in the valuation that he got, and I think it's important to recognize the importance and the value of this. Another trend that we're seeing is litigation. The cost of litigation has skyrocketed, and I can't underscore that statement enough. You're seeing the combined total as far as looking at the yearly average cost of all U.S. patent litigation defendants is $19 to $36 billion, and a lot of that's legal costs, some of it's settlements and damages, and the more you have at stake, the higher you're going to be. So a trend that we're seeing is that the costs are going up, and you see on the bottom line, you see what's called NPE plaintiffs. So NPE stands for non-practicing entity. And I know there's some on the phone that know what these folks are. They're patent trolls, basically. You may have heard that. Just Google the word and you'll find lots of hits on it. So basically, these are entities that have nothing better to do but go out and collect patents. So they buy them on the open market, and they monetize them. So they go out and they send notice letters to IBM and the operating companies like Verizon, and they say, you're on notice for patent infringement on patents that I acquired. And unfortunately, the only defense you have is to either invalidate the patent, so show that there's some prior art that pre-existed the filing history of this patent, or you try and prove non-infringement. And both of those cost money to defend. And so these patent troll entities will buy the patents, and they will go out and assert them and asking for money which falls below the amount of money that it takes to defend them. So in the case of an active litigation, it can cost you as much as $1 million a month to defend an active litigation. So if it goes into litigation, you know you're going to have to spend money with these guys, and they're only asking a fraction of that. So they will ask for maybe $200,000, $300,000 because they know it's below the threshold that you will ask, that you will have to spend in litigation. So oftentimes, an operating company will spend money to settle these cases versus litigating. And it's an unfortunate situation that you find yourself in, because you're an operating company trying to sell laptops or keyboards or cell phones, and this is a tax that these folks will apply onto you. So very smart strategy, but oftentimes they will go out with poor quality patents, which bogs down our patent system. So the legal systems bog down. We get bad quality patents, which is not nice, that you have to deal with. So the two entities that I founded back in the day, Allied Security Trust and Unified Patents, address this need, because what they do is they collect patents and they go out and buy them before they get to this open market, before they get in the wrong hands of these non-practicing entities. And, in the case of Allied Security Trust, I would buy the patents, and then I would inoculate or basically solve the problem for the member companies by giving them a license, and then I would flip them back into the market, so basically a catch and release, and I would resell them once I solved this problem. So there's different solutions to this, but the NPE problem is growing. It's becoming a larger problem versus a smaller problem. So if you look on this chart, for instance, the amount of litigation that occurs in, say, second quarter of 2019, and even before that, you see the vast majority of those are these NPE lawsuits. You're seeing a lot of churn, and as I say, it drags down our legal system, which is already expensive enough, and you're having to deal with these cases. So it's becoming a large problem. I think the other trend is that it's expanding into Europe and other parts of the world in a big way. Europe is undergoing some change, and they are actually adopting a new patent system called the Unitary patent system, and they're having a new court called the Unitary Unified Patent Court. And what that will allow you to do as a patent owner is to pay one fee, and you get application across multiple jurisdictions. So you get a patent that will cover Italy and Germany and Spain and the Netherlands and France, and you only pay one fee. It's great for the patent owner because you pay one fee. But and the Unitary Patent Court means that you will pay one fee, and you can attack people in multiple jurisdictions by paying one fee. So it's nice for that, but it opens the door for these entities to come in and attack and pay one fee, and you can attack a company in multiple countries. So it will open the aperture in the near future once these are adopted and passed, which will probably happen. It keeps getting extended, but it will happen probably in the next year or two. And that's when I think entities will be attacking those jurisdictions as well. Some of the trends that I've noticed, Morrison & Foerster, which is a big law firm, conducted a study of IP legal decision makers, and it shows a significant shift in the nature of IP litigation matters that large companies face. So when I say nature, it really is a lot of the technical areas like telecommunications are becoming more pronounced with respect to litigation. Areas like healthcare are becoming higher targets. I noticed I had about 20 cases on my docket when I was at Phillips when I left. So a lot of these areas that previously had not been subject to litigation are now growing in IP litigation matters. The annual spend, I mentioned that has been increasing, growing from 1.7 billion to 3.3 billion in 2019. The growth rates have slowed, but it's double-digit rates, and the settlement amounts have been huge. So the spending has increased. The number of matters that companies are managing is down, but the average damages amount has been increasing. So they're more complex and riskier, with 1 out of 5 being classified as affect a company, or 4%, which is a huge exposure to a company, or high risk, 15.1%. And 7, as I mentioned, the expansion overseas with a lot of the exposure, 7 out of 10 are now filed outside the U.S. And there's lots of reasons for that. I know I was quite successful in doing offensive litigation in areas like Germany and France and the UK and India. And the reason why is because you can obtain injunctions in these countries. So it's cheaper, it's faster, and an injunction means that you have to pull a product off the shelf today, and as a result of a decision of infringement. And so it becomes a big exposure for a company, and so invariably, rather than get exposed to that kind of a decision, that draws settlements and allows settlements to happen much quicker, so it doesn't get drawn out in the court system. So those are becoming very, very popular venues. Another trend is increasing is what we call standard essential patents. Standard essential patents are, you mentioned the evolution of 2G, 3G, 4G, and now into the 5th generation technology. We had a number of these patents when I was at Phillips, and I think what you're seeing in the cell phone wars, the Samsung versus Apple is a perfect example of that, where companies have patents that they claim are satisfying a specification for 4th generation wireless technology. And so there's a published specification by the technical standards bodies that have the ability to have companies that have patents that satisfy those standards to be able to enforce them. So they go out and they actively enforce against infringers in this. So that's increasing as well. I mentioned the NPE litigation is increasing. Europe and some of these other venues have become very popular. Another aspect of IP, another trend, is that there's more options to securitize or collateralize IP assets. We have a product at Aon, for instance, which I'm quite excited about, that will allow a company through a hard asset lending use your IP as collateral as a pure debt instrument. So you're able to obtain a loan if you're a Series A company looking to obtain a loan to progress to the next level. And you have some interesting assets, whether or not it's data, patents, or trade secrets, or trademarks. You're able to leverage those, obtain funding, and you're not giving up your precious equity. So it's quite a nice benefit for IP holders increasing your asset value and to obtain this hard asset-based lending, and you have different options because you're shaving costs off of traditional forms of lending, in some cases up to 6 or 8%. You can shave the percentage off your coupon rate. And for the lenders, it solves your valuation and stability issues and your disposal issues. So very powerful trend that's increasing. Another trend is that China has rapidly become a technology and innovation force. They are out-patenting the U.S. by a 3-to-1 margin. It's becoming highly developed and sophisticated. Their patent courts, they've got 3 specialist IP courts now in Beijing, Shanghai, and Guangzhou. And China also has a custom system adopted to stop counterfeiting, so that they've addressed that. You know, I met with the head of CIPO, which is the Chinese Patent Office, and he's explained, you know, it's becoming a more plaintiff-friendly venue, so you can go in and actually win a case in China against Chinese companies if the case is correct. So the world is changing. They're out patenting. Unfortunately, they have to deal with this whole quality versus quantity issue. Theft issues, so trademark cases are becoming more prevalent. You had a New Balance case where they won damages, a Michael Jordan case as well, in which case you have copycats. So becoming a leader in green technologies, artificial intelligence, it's a big trend. Digital technologies reshaping the world. I mentioned standard essential patents. FRAND, which is fair, reasonable, and non-discriminatory, is a necessity for standard essential patent technologies to be widely deployed. So it's becoming a huge challenge for the court systems in determining what FRAND means. These patent thickets, so the cell phone is a good example, 250,000 patents, that's a thicket, and those are getting more dense. Blockchain technology is really exciting. It's rapidly deployed, and there's a lot, whether you're in finance, transport, manufacturing, logistics, it's becoming a crowded patent space. We have a patent on a trade secret registry, for instance, that we have issued that basically will solve the issue of trying to come up with how do you register or document or have a repository for trade secrets. Through using the blockchain, you can take a unique hash, a fingerprint of that trade secret and a timestamp associated with it and put it onto the blockchain, and now all of a sudden you have a notary-blessed register that you can sit in front of a judge and prove that you have registered and documented this trade secret. And the blockchain is a great technology to be able to do that. Another trend is in artificial intelligence. I was pleased when I was at IBM because that was, if you remember, back in the 90s, but there was a big chess match between Deep Blue, which was the big server at IBM, versus Kasparov, who was the reigning chess champion, and Kasparov lost that chess match. I remember that. That was the first real example of a proof point for artificial intelligence being able to prove it can make decisions. In this case, it was a machine learning aspect on how to make a very intricate decision relating to analytics surrounding a chess match. So it was wonderful. I was in Volvo last week at their headquarters talking about autonomous vehicles and the intelligence aspects around that, and being able to show the massive amounts of intellectual property, everywhere from trade secrets to patent filings, all around autonomous vehicles and artificial intelligence. Absolutely fascinating. You know, being at Philips and seeing medical diagnosis and advanced manufacturing and how that's done and how you can implement that. So the growth is fueled by a profusion of digitized data and computational processing power, but the inventions are booming and shifting theory to commercial application. And the amount of patents, 340,000 AI-related inventions, and published over 1.6 million scientific publications. I mean, it's massive, and so it's becoming crowded and unfortunately become a very hotbed for litigation as well. IBM has the largest portion of these applications, followed by Microsoft, but there's lots and lots of other players, including universities. I'm sure Temple has quite a few as well. This is sort of just looking amongst these companies who has the biggest stack. You see companies, Microsoft, Amazon, Google, Apple, and Facebook. The patenting activity here is quite extensive, and Google and Facebook are along with Microsoft, are leading the way. Another trend has to do with the Internet of Things. So IoT is very, very, you see this chart where all different devices, all different types of applications relating to all different types of connected devices. And that's where it's become an IoT gold rush over the last 10 years. IBM, again, is among the leaders. Citrix in the IoT field, and particularly noteworthy is non-practicing entities. Once again, buying up patents here because they're seeing the money potential. As money grows and as revenue streams grow, they can exploit that. And the last thing I'll talk about is really the strong emergence of trade secrets, because this has become an area of intellectual property I'm quite excited about, because companies are really just trying to understand what this equilibrium looks like. Because as I mentioned, when you come up with an idea, there's an inflection point. You have to figure out how you want to capture that, whether or not it's keeping it as a trade secret or as a patent. And this Defend Trade Secrets Act that was passed, requires you to make sure that you've documented this in the appropriate way, and you have a repository for your trade secrets, and that you've done the necessary steps to protect them. You've firewalled them off. You have the right security mechanisms and physical and network securities to protect them. It's a requirement. And so more and more innovation is being protected in this manner. And with rising employee mobility in Silicon Valley, I spent a lot of time there in seeing the rapid change of people moving from Apple to Facebook to LinkedIn. And it happens all the time. And unfortunately, people like to impress their employers by bringing information that they shouldn't. And you're getting misappropriation of trade secrets all the time. So as a company, it behooves you to try and figure out ways to protect these. Obviously, the most famous examples of trade secrets are the Coca-Cola syrup, which has been a trade secret for many, many dozens of years. And, and that's through their very careful protection of these, putting it into a vault, having only a handful, I think just 4 or 5 people that actually know that secret behind that. So it's important. And 82% of respondents in a McKinsey survey, Baker McKinsey survey, said their trade secrets are an important, if not essential, part of their business. But unfortunately, the theft statistics show between 250, just in the U.S., 250 billion a year as far as the theft incidents. So I want to stop here because I recognize that we are, I wanted to allow folks to have time for questions. I've sucked a lot of oxygen out of the room, so hopefully somebody can help me. But I've also expressed a lot of ideas, a lot of trends, and there are a lot more that I could have gone into, a lot more detail. But suffice it to say that there is both an opportunity as well as a risk, and I didn't even go into the risks associated with what you should look at and how you should prepare and address these IP risks and challenges for companies. But it is an exciting world that we live in, and it really helps to have companies that are on the leading edge of deciding on how this will make a difference to them.
So this is Carrie. If you have a question, you can raise your hand and I'll unmute you, or you can chat me and we'll address it. You should be able to, if you go to the participants panel, you should see a little hand at the bottom left there. Yeah, Stuart.
Hi, great talk, really good slides. Could you talk a little bit more about what is really changed with the need of documenting trade secrets with the recent law change? One of the things we've been thinking about, that it's perhaps more important to keep things as trade secrets now than as patents, because we don't have to worry so much about prior use issues. But you could expand a little bit on that. That would be great.
Yeah. So very briefly, in the world of trade secrets, as I mentioned, there is a requirement that you have to. It's a different type of a classification, data classification. So companies, I'm advising one Fortune 5 client right now that their current data classification is confidential, and they sweep trade secrets under that. And it's a misnomer, because the trade secret is a much different classification of data. So with respect to trade secrets, being able to carefully document them, but more importantly, training the employees themselves. So what you have, trade secrets are normally generated in the R&D facility or perhaps in the product units. And a lot of times it's done in this Fortune 5 client's estimation. They have no idea how many they have because they don't have their arms around. People that are creating them are doing the wrong thing, which is not having a centralized repository for them. That's the first caveat that you need to have. And that repository has to be tracked as far as who has access, employee access, and different levels of access, right? And which trade secrets have, have different employees have different access to those. As I mentioned, this blockchain tool that I mentioned is a way to kind of solve that, because it allows you to have your trade secrets sitting behind in your repository, but it allows you to have proof, and this is where this two burden of proof has to be shown to a court. And the DTSA, this Defense Trade Secrets Act, clearly spells this out. You have to have the ability to prove that you created a trade secret on January 19, 2019, and that it relates to this product or this service or whatever it is, and that you have had the proper security protocols in-house to be able generally to protect trade secret assets. Those are the two things that you have to have and satisfy in order to get the legal requirement for trade secrets. So being able to, first of all, identify them and being able to educate, employees in looking at employment agreements, onboarding and offboarding of employees, looking at employment agreements, looking at third-party contracts, NDAs, all different types of policies, procedures, and data governance around it. Those all have to be carefully examined, along with physical and network securities around trade secrets also has to be examined. We perform a lot of that consulting to companies to help advise them on better ways to tighten up these securities, and as well as documenting these things the right way.
That was great. Thank you.
I also see Michael Douglas had a question. I apologize, I can't see how to view your question. So if you want to say your question out loud, or you can send me a question in a private chat.
I'm not sure if you can hear me.
I just unmuted you. You're good.
My question is about the valuation of patents. You had a number, I think it was $1.6 billion. I wasn't really clear what factors went into that beyond what you mentioned as far as actually licensing it. What other factors do you think you need to consider in valuation of an IP portfolio?
Okay, so that's really two questions. The $1.6 billion, by the way, was just through monetization, right? And this is why my discussion with Gersten was very focused on the other part. So on the $1.6 billion, that consisted of technology licensing, patent licensing, brand licensing. And those were really the three main components. So a lot of it was through patent assertions going out to licensing companies, but also leading with technology. So working with a company like Sony and converting them to the next generation semiconductor process methodologies that IBM was implementing and sharing those technologies with them, licensing that along with the patents that covers it. So that's one piece. As far as the broad answer to your question on how you value IP, there's a whole school of thought around that. I think there's a right way and a wrong way to do it. There's no standardized way to value IP. The way that we're doing it at Aon, and the way that I've conducted it in a way I think is appropriate, is to combine a quantitative measurement, so doing some type of a discounted cash flow analysis of future revenue streams associated with IP, associated with that company or that product line, is good. But you have to also consider other factors on the qualitative side. So combining the quantitative, which may also look at cost to recreate the technology from scratch, what would it cost to reproduce this, or looking at market comparables, or looking at sort of income generating methodology on the quantitative side. But on the qualitative side, I also look at elements like the coverage. And when I talk about coverage, I look at the IP itself, whether or not it's trade secrets or know-how or patents, whatever it is, and seeing the relative correlation between what we are measuring the value of. So if it's a revenue or a product stream, or whether or not it's a company itself, trying to figure out IBM's value, you convert and you try and say, of the revenue stream that's associated with IBM, how much is directly attributable to the IP? And you have to look at coverage. Does the IP cover every functional aspect of this product? Or do you sell a cell phone that has these features and your IP only covers certain of those? So you have to make a qualitative assessment on the relative coverage of your IP overall for what you're assessing. And so that's very important. So you look at that qualitative. You also look at the opportunity, the market opportunity based on the strength and the quality of that IP. From a qualitative perspective, there's ways to do that. And on the risk side, you also have to calculate risk of invalidation of some of that portfolio based on obviousness, based on too broad of coverage of the claims of the patents, based on prior art. We can make an assessment of that, which will detract from the value. So you combine the qualitative aspect and the quantitative aspect together to get an overall assessment of that value. So that's how we conducted it, and that's how I would recommend a company looking at valuation of the IP stack.
We also have a question from Tom, who asks, what kinds of patents are the most valuable nowadays? How do they create value? Example, SDP, cross-licensing, litigation avoidance, etc. Yeah,
so I think it's a broad question as far as what's the most valuable patents. Valuable patents value is in respect to, a patent is an exclusive right? So it gives you the right to exclude others, right? So rather than being able to give you the right to do anything, the right to exclude others. So when I look at a patent, the value of a patent, you look at what's out there. So the right that you're granted is with respect to the availability of products that are claimed within or embodied within that patent. Certainly there is lots of churn on the value of patents related to telecommunications, for instance, because there's a lot of revenue associated with that. So I think it would vary, I think, as far as what's the most valuable patents, because you can make a case that, healthcare patents or semiconductor patents or IoT patents or AI patents or blockchain patents. So it's all in the value of looking at the claim elements and looking at the applicability and the strength of the patent based on its merit, based on its applicability to third-party products, which may be related to it. And then what was the second part of the question?
The second part was how do they create value? For example, SDP, cross-licensing, litigation avoidance.
So a patent can create value based on, and I mentioned those 4 quadrants, and I think that's important because it depends on what your objective is. If your objective is exclusivity, then the way that you obtain value is through premium pricing. Because once again, a patent is a negative right. It gives you the right to exclude others. And if you have a patent on an ultrasound machine that has a certain functionality and nobody else has that, then you can be the only guy selling that product, and you can charge a premium because it's a feature that everybody wants and nobody else can have. So you have a monopoly, basically. And so that premium profit is a very valuable patent. That's the value you're achieving. As standard essential patents, if you have those, that's very good too, because you can have a functionality nobody else has, and you can be the only one with that function in the marketplace. And you may want to achieve value through licensing that, and so you want to have revenue generation, or you could have exclusivity, you could use it in cross-licensing. So it depends on the context and the overall strategy that you want to achieve. But I would find myself in one of those 4 quadrants and exploit that value in that manner.
Great. We have a question from Adi or Adi. Go ahead, you're unmuted.
Oh, great. A great talk, and great set of slides. I had 2 questions, actually. One kind of relates to the previous one that was asked. So what are the real tax implications of actually ascribing a dollar value to the patent portfolio, and especially considering a large company with 80,000 patents or so is probably selling those products in multiple countries? And a follow-up on that is, how do you optimize when you have a large portfolio for selling for foreign filing considerations? Because a portfolio of that size, I'm sure, actually is pretty expensive to maintain.
Yeah, so I'll take the second part first, which is expensive to maintain. Absolutely, I agree with that. So you're having, and this is was sort of the churn that I was having with my CEO, who was of the mindset that we wanted to have the good PR of IBM announces that they're #1 in patents every year for the last 30 years, and that's great and everything, but I was always of the mindset quality over quantity, because it is expensive to maintain worldwide patents. But you have to make a conscious decision as a company on on where you want to have that coverage. So if you're selling and manufacturing or doing research within a country, you want to make damn sure that you are that you have coverage in that country. Otherwise, you'll find yourself in the awkward situation of selling a product in the U.S. of which you do have coverage, but you can't sell it in Europe because someone else has a patent, right? So you don't want to be excluded out of certain markets because you were failed to file and maintain a patent in a certain jurisdiction. So although it is expensive, you have to make that sort of ROI decision. What is my return on my investment? Does it pay for itself? Because I'm achieving revenue from the sale of products of which those patents cover. So very, very important decision. The tax implications obviously is important because and tax can be applied in different ways. If you have a revenue stream associated with licensing, obviously there are tax implications. It's revenue that comes into the company, and and so then there's the cost benefit decision. Is the tax prohibitive for me? The tax payment prohibitive for me to look the other way? Because it's a lot of work, there's a lot of energy, and it's a lot of perhaps reputational damage as well, going out and licensing and poking people in the eye that you might not want to poke because they're a supplier and you want to extract money from them. Does that revenue associated with that offset the tax implication of having to deal with that and ample stand the amount of money that's owed for that? So it is something to look at, as well as any type of tax implication for foreign jurisdictions as well. It has to be weighed.
We have a question from Olga on chat regarding patent trolling. Do you see a trend in the U.S. or change towards a European system which requires a loser to pay all expenses and fees? Why do you think the amount of litigation will increase in Europe with the UPC in effect?
Yeah, so I think the first question is, I think it's going to the U.S. I don't think is going to change to a loser pays mentality. So I think it will continue to be a very attractive venue for trolls. I've been talking with Director Yanku on trying to look at different ways to conduct patent reform. Unfortunately, the only thing that I've seen presented by some of the senators and the legislators has to do with doing away with attacking the NPE itself. And the problem with that is you're sweeping in a lot of entities that you don't want to sweep in. Temple University would be classified as an NPE if you went out and did licensing because you don't manufacture and sell anything, and so therefore you're classified as a non-practicing entity. An individual inventor that came up with his own idea for a new widget, I think he should be able to go out and make money off of that because he generated that idea. Similar to Temple should be able to do that as well. So I don't think doing away with NPEs altogether is the answer, because you don't want to do away with the university's ability to exploit and get money on their R&D. So I think the right way to do it is to look at the qualitative nature of a patent claim. So what you want to do is do away with bad quality patents. Force an NPE to only go out with the good quality patents, and because oftentimes they will go out with patents that are subject quality, and once again it drags down this patent system. So I think that's a more likely scenario as far as a change in our patent system, as far as a law change going forward. As far as the European court system, I think you're right. It is going to be adopted, and I think the reason why it's going to be attractive is because it will allow a patent troll to pay one fee to cover multiple jurisdictions. And so as long as, right now they have to, if they want to sue in the UK, they have to go to the UK court and pay a fee. If they want to sue in the Netherlands, they have to pay there. This will allow them to sue in multiple jurisdictions and get a lot more money, a big bang for their buck, and pay a less fee than you would have to pay filing all of these different cases in different jurisdictions. So that's why I think it'll be much more attractive.
All right, any other questions? All right. Well, thank you very much. I just have one brief announcement. Sure, why don't I do that? So again, thank you everyone for joining us. If you're interested in these types of topics, interested in innovation or entrepreneurship, we have a number of graduate programs as well as undergraduate programs that can help you. Brian was a speaker last night in my Innovation Intelligence class, so this is the caliber and the experience of people that we bring in and collaborate with for our classes. We have 3 graduate certificates. You can see them on the screen in Entrepreneurship, Innovation Strategy, and Healthcare Innovation. That's just 3 classes. You can get it done in 1 or 2 semesters. We also have a specialized master's degree in Innovation Management and Entrepreneurship with 3 tracks: Innovation Strategy, Entrepreneurship, Technology, and Innovation Management. That can be done as little as a year, full-time. And we also offer part-time options as well as online classes. So you could do either one of these certificates or degrees online completely. So if you have any questions, please let me know. My email is kerry.slade@temple.edu. That's kerry.slade@temple.edu. Happy to answer any questions or talk with you. Thanks again for joining us and have a great day.